I'm Irina, a local realtor in Hawaii. Welcome to my YouTube channel. Today, we are talking about mortgage pre-qualification requirements.
Call it the four pillars, kind of like the legs of a stool. And we usually look at income. That's the first pillar. What's your income? We look at your assets. Do you have a down payment? Can you cover closing costs? Do you have reserves after you closed that you can cover a shortage? Um, then we look at your credit score. Really important. FICO scores have really become a key point to a loan, especially if we go into the lower document types of loans. And then your other debt, your consumer debt. If you have a lot of consumer debt, it's hard to get loans. I mean, that's the way it is. So it's important to manage your consumer debt. Like I said, drive a junk car versus a brand new one. So, but those are the four things we normally look at. And if we see weaknesses in any one of those pillars, then we have ways to augment and bring in different loan products and things like that, gifts from family members and things like that. So, but that's the advice that I have to then give to clients of here are your options. Based on what you gave me, you have 4 or 5 different options. Go home, think about it, talk to whoever you have to talk about, and we even have young people where they bring in what's called a non-occupying co-borrower, their parents, that will go on the loan with them because they don't have enough income, and they can buy their first house using their parents' income in addition to their own. So again, there's so many ways to help people get into real estate. And remember, real estate is the primary source of wealth in this country. And people that don't have real estate have about 20% of the wealth that somebody that does have real estate. So it's amazing how important it is. Yeah.
If you have questions about your situation or you are thinking about buying on the Big Island, feel free to reach out. We are ready to help. Is the difference between being pre-qualified and being pre-approved?
In the state of Hawaii, the Hawaii Board of Realtors define the difference between pre-qualified and pre-approval, and we have to follow that definition.
Okay.
Pre-qualified means you have provided me an application, your income statements, your asset statements, and I've pulled a credit report and I've done the analysis. And based on my experience and expertise, I feel that you're qualified. And I don't remember a time that I pre-qualified somebody that didn't get approved. So that is a pre-qualification letter in the state of Hawaii. Now, pre-approval means that not only have I done all of that, but a lender has underwritten your loan, which they don't do unless you're in escrow. So there really isn't a pre-approval letter available in today's marketplace. I mean, you can get some lenders to do that if they're slow, but that means they have to underwrite the whole loan. You just don't do that. So pre-approval means you've been underwritten, and the only thing you have to do is get a property into escrow, and you're done. And that's just not done very often. Yeah. And people like Rocket Mortgage don't follow the standards where the client is just putting information into a website and printing out a pre-qualification letter where no human has ever looked at the information. And garbage in is garbage out. So we're the filter. We take all the information, filter it down to get you a solid pre-qualification letter. And I promise you, if a realtor gets a pre-qualification letter from my company, they know it's solid. If they get a pre-qualification or even a pre-approval letter from some of these mainland lenders, you don't know what you've got. You really don't, because they don't have a definition or a standard of how they got to that pre-approval letter or pre-qualification.
I've heard that lenders, especially for government-backed loans, pay really close attention to the debt-to-income ratio. The next question is, what ratios typically work for different loan programs?
To make things simple for the viewer, let's say you earn $10,000 a month and you're a W-2 employee, and that's your gross income, $10,000 a month. That's before taxes are taken out. So for the most part, you can get a loan as long as your debt to income ratio isn't above 50%. Your housing payment and all your other consumer debt payments can't be more than $5,000 a month. The housing payment includes principal, interest, property taxes, property insurance, and it's on the monthly basis. And if you're buying a condo, the HOA dues. And then we have to look at your consumer debt, like car loans or credit cards, and add that together. When you combine all of that, it can't be more, in this case, to $5,000 a month. There are exceptions to that. Now, USDA is much, much lower than that. So that's why USDA is so hard to qualify for. But for VA and conventional loans and FHA, usually we can get up to 50%. Now, it's really important that people minimize their consumer debt. And I've had clients that came into me that want to buy a home. They have children. They're adding another child pretty soon, and they've got these big, huge car loans. $900 a month, $600 a month, and we've actually had clients that went and sold those vehicles off and got junk vehicles, and all of a sudden they can qualify for a home. So what's more important, driving a junky vehicle or having a home for your family? And I think the home for the family is a little bit more important.
From my experience working with buyers on the Big Island, these three things often determine whether the transaction goes smoothly or falls apart. The four pillars, income, assets, credit, and debt, are what the lenders look at behind the scenes. It's not just about your credit score, it's a full financial picture. The solid pre-qualification letter is your ticket to making a serious competitive offer. And your debt to income ratio, that's the number that quietly determines how much home you can truly afford. The more prepared you are before we even start looking at homes, the smoother and less stressful your purchase will be. Next up in my Hawaii Home Loan Guide, underwriting and the main steps of the loan process.